Hello and welcome back to another episode of the For the Property Investor podcast. And we're here again with the weekly news. And of course, the only man that brings us the news is Nick Bendel. Welcome, Nick.
Well, thank you, Owen. Great to be here. I love the fact that we're both wearing matching black t-shirts. We are on brand. I'm not sure what the brand is, but we're on it.
Well, I was waiting for you to get the hint or the memo or both. And yes, it's finally happened. It's the black t-shirt is the uniform for the podcast. So I expect next week that you'll stick to the process, please.
I certainly will. And I noticed last week that you had a different backdrop, and it turned out you're in Hobart. And I'm noticing that you've got another backdrop this week. Where on earth are you?
I am on Earth, yes.
Mm-hmm.
But not as far this time. Just in Sydney for some meetings. So staying in the city for a few things that are happening. So yes, but I think next week we'll be back in the in my dungeon where I belong. Yes, with the usual backdrop.
Yeah, I'm surprised I let you out. That was very kind of me. But yes, back into your dungeon soon.
Yes. Well, it won't be long. Won't be long. But what have you been up to for the past week, Nick?
Oh, I've had a very good week, very productive week, very stimulating week. And one of the things that I'm very excited about, my company, Hunter and Scribe, we are a copywriting agency that writes content for finance and property businesses. We're actually writing 3 books at the moment for 2 mortgage brokers
Wow.
and a builder. And these
Yeah.
books, the clients, they're not looking to sell the books. Whenever potential book clients ask me, so Nick, how many copies do you think my book will sell? I always say, none. It's not going to sell any copies. Just assume it's not going to sell any copies. And they're like, well, then, Nick, why should I have a book? And I say, well, the purpose of a book is not to make sales. It's actually to give away copies, to hand free copies to potential clients and referrers, because the only people with books are industry experts. So if you have a book, that must mean that you're an industry expert, and that will differentiate you from 99% of your rivals. So that's why these 2 brokers and this one builder are proceeding with their book, and we're making really good progress with it. We've interviewed them, we're writing it a section at a time, we've sent them parts of the books. They're really impressed with what they're receiving and very excited to finish off the books over the next few months.
Great. And you know what? If you give away all of your books all in one day, would that make you like top of the bestseller list?
Well, if no books were sold, I don't think it would.
Oh yeah, I suppose you got us on the loophole there.
Yes, that is the sort of thing I do. Uh, I am a very big fan of this book strategy. I'm going to steal someone else's line. A book is a business card on steroids.
Yes, it is.
Hmm.
So there you go. Well, Nick, we'd better get into the news, I guess. What's in the news this week?
Domain predicts record-breaking year for property market. Domain has forecast that every capital city will have a record high median property price by the end of 2026. House prices are expected to rise 7% in Sydney, 6% in Melbourne, 5% in Brisbane, Perth and Canberra, and 4% in Adelaide. As a result, every city's median house price will be above $1 million and at record high levels at the end of 2026. Domain's Chief of Research and Economics, Nicola Powell, said, Australia's housing market is set for another strong year, with demand still high and buyers continuing to chase affordability, particularly in the unit market, which is expected to outperform in several cities. There are encouraging signs on the horizon, with new housing supply starting to come to market as building activity picks up. While prices and rents remain elevated, slower population growth, rising incomes, and a cautious RBA should help the market move toward more balanced conditions by the end of 2026. Oh, okay. First thing, first things first, is Domain right to say property prices will be higher at the end of 2026 than the start?
Well, there's certainly no indication that they won't be. It's everything's still growing at healthy, but not unrealistic rates. So the rates that they're predicting is nothing too unrealistic. So yes, I would expect so.
Okay, so you're anticipating further price growth in 2026. Now, Domain says that of the 6 biggest capitals, excluding Hobart and Darwin, Sydney and Melbourne will have the strongest price growth next year. Is that what you'd expect as well?
Yes, well, Melbourne has finally started to grow in the last couple of years, and but still has a lot of catching up to do. So I'd expect Melbourne to definitely keep growing. And Sydney is just not stopping. It tends to have a bit of a slowdown, but with the pent-up demand and continued increase in demand by the increase in immigration, because we need to remember the biggest number of immigrants that move that come into Australia do come into Sydney and Western Sydney. So that's a lot of demand that needs to be met. Yes, there's still a lot of demand in Sydney that would be pushing prices up.
Now, going back to national prices, Domain says national price growth, it's going to slow in the second half of the year due to affordability ceilings. I find that interesting, not wrong, but interesting. If we are near affordability limits at the moment, I'm wondering why prices would grow further from here. And if they are going to grow further from here, are we really near an affordability ceiling?
Yes, but we need to remember that the biggest portion of the market are people who are selling and buying again. And if they're selling an existing property, and they're selling and buying in the same market, then they've had that increase in growth, and maybe they've paid down some of their loan at that time. So even if they can only borrow the same amount as what they could do before, they've got and so they might be increasing their loan, by a small portion, but they've got a lot more equity to be able to use to be able to increase their purchase price. So, yeah, it's like for like in terms of buying in the same market. But yeah, there's still a lot of demand. Other people will be buying at different times for different reasons. And yes, and maybe we're bringing in some immigrants that have some money to put into a property as well. So you never know.
Well, let's move on to our next story. And I'm very, very curious as to what sort of commentary you're going to give for this next one. Economist takes aim at property investors. The most recent data from the Australian Bureau of Statistics showed that the investor share of borrowing in the September quarter jumped to the highest level since 2017, which prompted one prominent economist to have a go at property investors. Saul Eslake said that while investors will be congratulating themselves for adding to the supply of rental housing, such praise would not be warranted because 83% of the finance commitments made by investors in the September quarter were for established rather than new homes. Eslake also said, these purchases do absolutely nothing to increase the overall supply of housing. And while they do increase the supply of rental housing, they increase the demand for rental housing by an exactly equal amount, by outbidding would-be owner-occupiers. So, contrary to what they consistently argue, if they weren't buying these established properties to rent out, the supply of and demand for rental housing would fall by equal amounts, and there would be no impact on rents at all. Owen, is Saul Eslake right to say that this strong rise in investor activity is, quote, doing absolutely nothing to increase our housing supply because every one extra home that is owned by an investor means one fewer home that is owned by an owner-occupier?
His argument is simplistic, and yes, I mean, if there's another property getting into the rental market, it's going to help renters. Short and sweet. and because there's more supply in that market. So yes, his argument could be considered correct if you're looking at the whole housing market, if there's no new properties being added into the market in general. But from the point of view of renters having more choice and more supply, which will put downward pressures on rents, and then that's a good thing. So yes, he's wrong. Or no, he's not right.
Well, okay, let me throw another thing at you. Your good friend Saul Eslake also took aim at the fact investors get negative gearing and capital gains tax benefits. So to quote Eslake, it really is time for governments to be winding back the generous concessions which the tax system provides for speculative investors in established property and restricting those concessions to investors who build or purchase new properties and who are thus contributing to increasing the supply of housing and in particular of rental housing. Is he right about that?
No, he's again. It's they're on this bandwagon that negative gearing and then capital gains tax. I mean, negative gearing has very little effect on any kind of benefits to investors. Yes, maybe in the first 5 years, but all those huge benefits that negative gearing properties got have pretty much been wiped out by, guess who? John Howard and Malcolm Turnbull in the last 30 years. So a lot of those benefits have been wiped out. So it's fairly neutral, the negative gearing benefits. And if people are buying properties now for the sole purpose of negative gearing benefits, then they're buying the wrong type of property to begin with. And it's not going to be a very successful investment for them. So it's, so that is a mute argument nowadays. Now let's look at capital gains tax by itself, because if you own a property for more than 12 months, then you get a 50% discount on negative gearing on capital gains tax. So if you made $100,000 profit, after 12 months, and you sold the property, then you would only get taxed on half of that $100,000, which would be $50,000. So that would get added to your taxable income for that year. I'm not an accountant, but yeah, check with your accountant to confirm that. It's because it could be different for your circumstances. So now, is there grounds for being able to take that away? Yeah, I mean, it's I don't think there's a requirement to take that away because we want to give people the benefit of or give people the incentive to hold on to these properties for as long as possible. So maybe if it was a more staged discount, so maybe they push the discount out for to 2 years, and then maybe they only get a 25% discount, and then at 5 years it went to 50% or something. We want to be able to make sure that they have a reason to hold on to these properties for as long as possible. But if we want to tweak something for political point scoring, that will not make a huge difference in the long run, but they want to score some political points, yeah, maybe we could play with that capital gains tax discount. But that's it. The negative gearing benefits are very minute. Yeah. What about owner occupiers? They don't pay capital gains tax, do they? So why don't they start taxing that? Or at least, why are they picking on investors? Not saying that I think owner occupiers should be taxed on the capital gains, because that raises a whole lot of other tax deductible issues. But why do they keep on picking on investors for this? So anyway, rant over.
Well, don't put away your ranting instincts just yet. So as we've heard, Celeste Lake is complaining that investors get special treatment from the taxman. But on the flip side, investors have to cop higher interest rates from banks. So I'm wondering, should we be calling for banks to charge investors the same rates as owner-occupiers?
Well, they were for many, many years, and then they've snuck in this higher rate at some point. So, yes, there's the security is the same. They would say that there's a higher risk. It's just like, yeah, nah, I don't accept that. So, there's no need for them to be charging a higher rate.
Okay, well, thank you. Some high-quality rants there. Let's move on to our final story. High-speed rail network moves one step closer. The federal government's independent infrastructure assessor has approved the business case for high-speed rail between Newcastle and Western Sydney Airport. The Newcastle-Sydney line would be the first stage of a national high-speed network linking Brisbane, Sydney, Canberra and Melbourne. Infrastructure Australia said the Newcastle-Sydney link would reduce the trip between Newcastle and Western Sydney Airport from 3 hours 26 minutes to 1 hour 30 minutes. Infrastructure Australia also said the proposal is forecast to improve productivity through better integration of the Newcastle to Greater Sydney economies, more productive business connections, greater competition, access to markets and higher paying jobs and labour supply. If construction of the Newcastle-Sydney line does go ahead, the project is expected to start in 2027 and end in 2042. Oh, and I was very curious when I heard about this because people have been talking about a high-speed rail network along the east coast of Australia almost since the days of the First Fleet. Do you think it will actually happen?
Well, I was going to say I'll believe it when they start, when they actually start on the construction of it. So yes, let's just wait and see, shall we?
Okay, and a high-speed line between Newcastle going through the Central Coast and then moving on to Sydney would link those three economies more closely together. Do you think the day might come when those three places are just one giant city?
Yes, well, in fact, nowadays it already starts to feel like that. Any Sydney-siders might not think that, who don't get out of their little bubble. But anyone on the Central Coast, Newcastle, Hunter region, are very much connected to Sydney. And whether it's for work or work opportunities, whether they have to travel there or for just or gaining work from the population in Sydney. So it very very much is a more connected economy now.
So as I mentioned, this Sydney-Newcastle link would be part of a bigger link from Brisbane in the north to Melbourne in the south. A high-speed network between Brisbane and Melbourne would have benefits and costs. Do you think the positives would outweigh the negatives, or do you think the negatives would outweigh the positives?
Yeah, well, it's I mean, it all depends on how many stops you put in between. It's it's great to have the high speed, but the stops slow it down in terms of the whole travel time. So let's get the first stage of it done and see how well that works first, I'd say.
Well, I will be very, very curious to see whether this does go ahead. I remember they were speaking for almost 100 years about building the GAN, and there were so many plans to do it. They kept getting cancelled. They did eventually build it. I think it opened in 2004 from memory. So these things can eventually happen. And who knows, maybe one day we will have a high-speed rail network along the east coast of Australia.
You never know. And hey, look at what it's building for this first stage, at least from Newcastle to the Western Sydney Airport. they've been talking about a Western Sydney airport, a second airport in Sydney for as long as I've been alive and as long as I can remember. So, and that's a long time these days. So, it's you never know, but I'm not holding my breath.
From memory, the link between Newcastle and Western Sydney Airport, there would be 6 stops. Newcastle being 1, Western Sydney Airport being 6. I can't remember what the others would be. In fact, Central in Sydney is one of them. I think there's also a stop somewhere in Gosford. So that's 4 out of the 6 stops. Who knows what the other 2 would be, but just 6 stops.
Yeah, well, it'd be surprising if it goes to Central because that's a long way out of the way. So, it's if it wants to take a direct route. Yeah, we'll see.
Well, great to chat, Owen. I know you're in Sydney at the moment. Next week, you said you're going to be back on the Central Coast. Maybe the week after that, you'll be in Newcastle. Maybe you're doing your own personal tour of the future high-speed rail network.
Yes, again, don't hold your breath on that one, but yes, got lots of other things to get done before they even start digging.
Fantastic. See you next week.
See you next week, Nick, and look forward to seeing what's in the news then. See ya.